when do you want to think more strategically about finance and not only building out your financial projections, but really having insights in order to make strategic decisions for your business?
Welcome to the Startup CPG podcast. I'm your host, Jesse Freitag. Today is our fourth episode in the First Hire series, where we talk about making first hires in marketing, finance, sales, and operations. So far, we've covered sales, marketing, and operations, so be sure to check out those episodes. And today's subject is finally hiring for finance. When is it time to hire a full-time finance person? How early do you need a bookkeeper? What functions within finance do you need to think about hiring for? Here to help us answer these questions is William Finkelstein, the Senior Vice President of Finance at Yamamotoyama, a 3-centuries-old tea company that also owns Stash Tea. Listen in as William covers the day-to-day of a first finance hire, considerations for whether to hire a freelancer, full or part-time employee, or an accounting firm, how to evaluate potential vendors and employees within finance, key metrics to track, how to prepare for your first finance hire and common pitfalls, and more. Hi, William. Welcome to the show today. How are you?
I'm great. Thanks, Jesse. I'm very happy to be on the show.
Yeah.
Love Startup CPG, been to events, love what the organization does, and happy to participate in the podcast.
Yes, awesome. Yeah, I'm so excited to have your expertise and your lens of the world on our series, the First Hire series about finance. I'm can't wait to hear all of your insights. I'd love if you could start us off by telling us a little bit about yourself and your background as it relates to finance.
Happy to. So I'm based in Los Angeles, lived in New York most of my life. And after I got my MBA at NYU, focused on finance, and I worked in investment banking for a while, focused on clients that were consumer products companies and retailers, and really loved when I was hands-on working at clients' headquarters, and that led me to want to become an operator. And for the past 10 years, I've worked at a variety of startup companies in the natural food and beverage space. Sometimes I was the first finance hire. And right now I work at Yamamotoyama based in Southern California. And, we are the oldest tea company in the world. And I am our Senior Vice President of Finance. And yeah, it's been going great so far. Happy to be here.
Awesome. That's great. And as some of our listeners may know, because I've sprinkled in references to me being a big tea fan, it's super exciting to get to talk to someone that even works at a tea company right now. It's like, this is like the dream interview. So
Great.
Well, I would love if you could kind of tell us a little bit about the framework for how you think about first finance hires. If a founder says, hey, when is it time for me to hire someone in finance, either whether that's a contractor, fractional, or full-time, what do you walk them through? What do you think about? What are signs that it's time? I'd love to hear a little bit about how you think about it, and then we can dig in from there.
Yeah. So, a founder's time is very, very precious, very valuable. And some founders have a very good grasp of numbers or want to get deep in the numbers. And some are more creative focused and truly want to focus on branding, marketing, and sales. So it does depend on the personality and skill set of the founder. So it ranges from some founders who in the early stages, they want to handle the accounting books themselves and don't want any assistance, all the ways to a founder who doesn't want to touch anything related to accounting. So usually really is getting to know the founder and how they want to manage their business and what they want to focus on to assess the timing of the first finance hire. So finance can be finance is used broadly, but what is finance? It's often considered accounting, anything related to capital raising, projections. So when we talk about finance, there's multiple functions within finance that a startup or founder would want to leverage.
Right. Yeah, that makes a lot of sense. That made me kind of think like, because sometimes you see people hire a part-time bookkeeper, or which isn't necessarily the same as hiring a fractional CFO or something. There's lots of different pieces that that are part of the finance function.
Yeah, exactly. So, if a startup is in the stage of raising money from friends and family, pre-revenue, or just a few wholesale customers, then a bookkeeper, a part-time bookkeeper can be very adequate just for really focus on maintaining the books, as opposed to doing anything very strategic. And if you're a founder or startup and you're looking to shift to more strategic, then beyond a bookkeeper is something that you really want to start to look at.
Are there thresholds of revenue or numbers of employees you're at, or any kind of signs of like, okay, maybe it's time to start thinking more strategically or reviewing these reports more regularly, or can it really be done at any time? I'm curious about your thoughts, because, really you could bring someone in very early to look at your cost of goods and your margins, but is that the right place to spend money early on? Is it better to wait? I'm curious about the timing factors.
Yeah, that's a great question. And, many of my answers, maybe it depends, because, there is different skill sets of founders. But to really hone in on your question more, is that when in terms of, it used to be easier to say, oh, at this revenue threshold is when you start to hire a CFO, or when you start to hire, an accounts payable or accounts receivable, when you've grown beyond a bookkeeper. And that's when, we were in much more of when CPG companies were almost completely wholesale, right? So there was less actual financial transactions going through the business. So the way to really think about it is, the accounting or finance factory within your company. How many transactions are going through that? How many expense transactions are there? How many invoices are there to customers? Am I primarily direct to consumer, where most of my transactions are perhaps on the Shopify platform with my customers, which there's a high volume of transactions, but they're much more simple. So perhaps a bookkeeper can still handle those. So it is more complicated nowadays to have a pure threshold. But, as many as others, who've been on this podcast may give advice about when to hire in general, is, you start to, especially when you're trying to really manage your expenses tightly in terms of growing your staff, is when when you hit a pain point, you really start to feel it. And that's an indicator.
Yeah, that makes sense. And what has it looked like? You mentioned that you've been that first finance hire sometimes. Can you tell, it could be from multiple roles or one role that stands out to you, of like, what did that really look like day to day? What were you doing? What was it like being that first person coming in? What were you having to figure out and set up on your own? I'd love to hear a little bit more about what it's like being that first hire.
Yeah. It's an exciting experience being a first hire at an early stage CPG company in finance. Sometimes the companies have had a bookkeeper already, and sometimes there's just been no function at all in the accounting area, and the founder's been handling it. And coming in as the first finance hire, your real goal should be to be bringing in structure and process to the organization. And accounting really touches many parts of an organization, so it's a really good opportunity for both the incoming finance hire as well as the management team or founders and rest of the organization to start to welcome more process and structure to the organization. and really day to day as a first finance hire, you're processing, you're issuing invoices, you're making sure that expenses are classified to the right account on the P&L or the chart of accounts. You are providing information about COGS or certain KPIs to founders. So it's really a critical part of an early stage CPG company.
Right. And do you see finance as a finance role being something that can fit well with, either coming in on a fractional basis of like hiring your first finance person as fractional, or combining it with another role like operations? Have you been in that situation? How do you see that playing out? Is that a good way to kind of, save a little bit from maybe hiring someone full-time in finance? Can you hire someone fractionally or in a combo sort of role?
Yeah, absolutely. And I think of it as accounting can be, the maintenance or the required bookkeeping and record keeping of the company. Whereas if you're looking to truly have a finance function, it's when you want to use that base of numbers and data that you have from proper record keeping with accounting to be more strategic and really inform the decisions that you as a founder and the management team are making, whether it be big decisions about whether to enter certain geographic markets, or whether it be if this product line or SKU makes sense. So that's when you get to start to use the finance function strategically. Do you need someone in-house immediately? Not necessarily. It's a nice to have. Fractional CFOs are great, whether it be a CFO on your outsourced bookkeeping firm that is available on a part-time basis that's well integrated with your outside accounting bookkeeping firm. That's definitely a great opportunity to leverage that knowledge and skill set while not having to bring on a full-time hire. And that can work very well through the first few years of a company.
Yeah, that makes sense. And on the topic of bookkeeping, because I feel like it's an important topic and building block that's part of this conversation. Do you see, in your experience, when you've come in as that first finance hire and, having had a company's had a bookkeeper or they haven't had a bookkeeper, would you say that a company should have a bookkeeper pretty early on? Is that a really key function? Is it something you can wait to get caught up on later per se, or try to do yourself? I would love to hear your view on when a bookkeeper should be brought in, how early, and then how does that help set up your finance hire if you've had that?
Yes, certainly before, as soon as revenue is starting for the company, should definitely have a bookkeeper. The more you wait, then the more of a mess your books become. And then you run into issues with not being able to understand what you're actually spending, what your COGS are. And then you're kind of flying blind. And, it could lead to delays in filing your income tax returns, not having financials ready if you need to pitch to investors. So it is very critical. And if you have, minimal revenue initially, not lots of transactions going through the business, as I referenced before, of thinking about the accounting function as almost like a factory that you're running, then it's relatively very low cost. So that is not something that you should neglect early on.
And for bookkeeping, do you recommend finding someone through a firm? Bookkeeping is kind of it seems not as regulated as maybe some other functions of finance and accounting. A lot of people can say they're bookkeepers. Do you recommend, just finding someone and letting them run, or using a firm, getting recommendations? How do you recommend finding a person that's kind of, they're really in the weeds on their business, so you want to find the right person, but also at an affordable price early on?
Yeah. So I recommend a dual path approach that you should, through your networking, or you can reach out to me, that there are individuals, freelancers, who do part-time bookkeeping, some which have, some CPG clients, some which have all CPG clients, and at the same time be speaking, and those are usually lower cost solutions versus some of the CPG focused bookkeeping firms that exist out there now, which may be more expensive initially, but can really set you up well for a long-term relationship. And they have, tremendous knowledge and expertise that they can really help you with growing your business. And you really have to see what you're most comfortable with and what you can afford. But at the least, it should be someone who understands CPG companies versus a bookkeeper who's worked with services-based companies. That would be more tricky for you. So really should try to find someone who's worked with CPG companies previously.
Yeah, absolutely. I've been on the hunt for a bookkeeper before and interviewed people that didn't have any physical product experience, and it just was like, this probably just isn't going to be a fit because I don't know everything as the client. And then also the vendor I'm talking to is asking me questions about how this accounting works in this industry. And I'm like, this isn't probably quite the right fit. I need someone that can help tell me how to set this up within CPG. So that makes a lot of sense to try to find someone that has some of that experience.
Yes, absolutely. And someone who understands where on the P&L and income statement some of the costs that you have are supposed to go. There's often confusion, especially with first-time founders, entrepreneurs in the CPG industry of what goes into COGS versus your SG&A and operating expenses. And there are, it does vary through what GAAP, generally accepted accounting principles, which is what larger companies and what investors expect to see how your income statement and your financial statements are presented. There's different areas that you're accounting for in COGS and SG&A expenses than the way you may actually think about what should be go in COGS. So it definitely is helpful for someone who's a bookkeeper or to be able to have that knowledge.
Mm-hmm. Yeah, I've also seen getting tripped up on running on accrual versus a cash basis of at some point you start on early on, you run on a cash basis, then maybe you want some investor funds or you're applying for a certain type of loan and they want to see your, finances in accrual. And that can be a switch if you don't have someone that can help you navigate that.
Yeah, that's a good call out, Jesse. And as I referred to GAAP before, accrual accounting is required by GAAP. And for those who don't understand, cash accounting is literally when a customer pays you, is how you are accounting and recording for your financial transactions. But in the accrual accounting world is when you issue that invoice is when you're actually recording the revenue. And then you are waiting to be paid, which is your account receivable. So it does make a difference. Candidly, and you can get away with it for some period of time. And I have seen that especially when someone doesn't have a part-time bookkeeper who's a founder. But there is a finite period of time where you'll receive an excuse or get out of jail card for doing cash accounting versus accrual.
Yeah, that's helpful. Thanks for adding some extra context to that. And on this topic of, I feel like finance is one of those areas that can be really overwhelming. And as you mentioned, a lot of times founders are they're starting a business because of their creativity or the ideas around the product and the vision and the marketing. And finance is something that can be overwhelming and hard to get into. What can founders do to either prepare for hiring their first finance person or even a bookkeeper to educate themselves? Like, what level of education do they need to have themselves? Are there resources they should be looking into if they're feeling, overwhelmed? And, how can they kind of set themselves up for success to work with who they're going to hire in finance and accounting?
Yeah, I would recommend that if they have advisors, especially if the advisor is a former founder or someone with at least a little bit of accounting finance knowledge, that they are included in the interview or vetting process for that part-time bookkeeper or the first finance hire. And, if you're on your own and you don't have anyone that's assisting you with the interview process, then, really ask, the basic questions and try and ask that candidate to explain things to you. Like, hey, this is the type of transaction I'm doing. How would you account for that? And really make them explain it to you as if, you're in elementary school and you know nothing about accounting. And if they can explain it to you where you understand and it clicks for you, then you have the right person.
Yeah, that's a great interview tip. And I also wanted to differentiate a little bit. You mentioned earlier, like when you're looking for bookkeeping, sometimes firms will have like a fractional CFO that you can have on your account. And when hiring someone like yourself, that's a first finance hire, I'm guessing that you're usually working like in conjunction with someone that's a bookkeeper. You're not necessarily being hired on to do the bookkeeping and then all of the strategy, or are you sometimes? I'm curious about how that looks and what works best for someone like yourself with a lot of the strategy and bigger picture finance experience.
Yeah, well, someone, if it's a very early stage company, zero or minimal revenue, someone who has lots of finance and accounting experience may be such an early hire that they are doing all the bookkeeping. And that is also a very good way for that first finance hire to really understand the guts of the company so that when they are starting to build out a team, whether it be internal or external bookkeeping, that they're able to properly manage it. So that can be helpful at times, but you are losing out as a founder on having someone who has a lot of finance and strategic finance experience by having them for more than a short period of time doing your detailed nitty-gritty bookkeeping, because then you don't get to take advantage of your more strategic resource you have in that finance hire.
Yeah. And what are some of the other functions that need to be covered? Maybe they're by the first finance hire, maybe it's a couple different people, but I'm curious, you mentioned a little bit like accounts payable earlier. We talked about bookkeeping. What are the functions that, are related to finance that are going to need to be covered as your company grows? Which are all of them can they all be rolled up into one person? Have you seen people have them outsourced between a lot of different fractional people or use a firm? I'm curious about kind of covering all the different functions. But, first of all, what would be all those different areas that you need to be thinking about eventually getting coverage for?
Yeah. So accounts receivable, accounts payable, inventory accounting, financial projections, and budgeting. So for accounts receivable, which is issuing invoices to customers and receiving payments from customers. And that is often when you've moved beyond bookkeeping and you don't have anyone internally in finance and accounting, that's often a first hire that you would do internally, because you always want to be servicing your customers best. Not that you want to neglect your vendors, but that's often getting the invoicing right. The more and more volume of invoicing transactions you have, the more and more SKUs you have, the more complicated it becomes to outsource that. So that's what I recommend as the first, if you're building out a finance team, whether it be from the ground up or from the top down. You might have a CFO, VP of finance, director of finance hire, but then for building out the junior, more transactional team, I'd recommend an accounts receivable specialist or analyst. And then we mentioned accounts payable. That could be a next step. So accounts payable, receiving invoices, paying invoices, vendors, suppliers. There could be a specialist, someone who really focuses on that as the next hire. And for inventory accounting can become, it may be very simple if you have 3 or 4 SKUs, and at the end of the month, you just account for it and it's an easy accounting entry. Or if you have many, many SKUs, it can be more complicated. And that, again, would be something more difficult to work with an outside firm to work with if your company has more SKUs and more variety of where your product and your finished goods and your raw materials are stored. So it really, think about it as the number of transactions, the number of customer transactions, the number of vendor transactions, the number of inventory related transactions. And that's, really when you could start to judge, oh, is this number of transactions, is that a part-time job? Is that really going to take up, 5 days a week for someone? And you can really think about it like that and make good decisions that way.
Right. Yeah, that makes sense. And on the accounts receivable side, if you're sold through distribution and have deductions as part of that, which it's a combo of accounts payable and accounts receivable, because generally they're just, those bills are coming straight out of your checks coming to you from KeHE and UNFI and reconciling those. Is that usually kind of part of that accounts payable role? Do you need to hire someone that understands deductions, or does that end up being a completely separate vendor or person sometimes on the deduction side?
Yeah, there are, it's a very important part of accounting from early stage to mature CPG companies, and ensuring that all those deductions are actually appropriate. So I'm happy you brought up this topic because, I have seen founders spend a lot of time going over all the paperwork from UNFI in KeHE. It's frustrating and it's not tapping their potential for what they're, could be growing the company with. So sometimes a part-time bookkeeper has knowledge, and sometimes outsourced bookkeeping firms that are specialized in CP industry can be helpful in accounting for the deductions. In terms of verifying if they're correct or not, they're sometimes okay, sometimes not the best. But there are specific firms that exist in our industry that focus or have a primary focus or significant focus on managing deductions for CPG companies. And what that means is you receive bill back deduction from a UNFI, a KeHE, or different distributor or retailer, and you can literally forward it right on to that third party or outsourced firm, and they will evaluate the deduction and see, was that the actual for the promo you ran? Is there an error? They will classify it properly for your expense accounting. And the key part, I think, critical, which often causes lots of pain and suffering for founders, management, finance teams, is disputing and managing the dispute process for any deductions with the distributors, retailers. They will take that fully on. So that is something that, I have been in companies where we didn't outsource that. And, I got deep in the weeds on it and disputes, and it winds up taking up a disproportionate amount of time for your finance team as well as management team. And it is, something that would be great to outsource if you can, because there are firms that specialize in it. So I highly recommend that.
Right. Yeah. And then are there key metrics that you recommend that founders either start tracking, before they make their first finance hire, or even a cadence of reviewing certain parts of the business? Because I kind of see it as if you build the muscle early on of thinking about your finances and your accounting, it's a lot easier to just make it a core part of your business than, going along for a couple of years and then realizing, oh, shoot, we got to start paying attention to all of this. So are there things you can think about early on and metrics to track, or, cadences of reviewing that you've seen work? I'm curious about your thoughts.
Yeah, absolutely. There are, many of the metrics early on are more sales focused metrics than expense focused metrics, which does make it easier to track without having a fully built out finance team or internal finance person. So on the wholesale side of your business, what's your sales velocity? Really to focus on that. Not your total sales, but your sales velocity. Not your total doors, but your sales velocity. How many units per store per week are you selling? And that's really key for you in assessing the performance of your product, of your brand, and is it really resonating with consumers? On the direct to consumer side, if you're a full DTC company or if that's just a segment of your business, working, whether you're handling that internally, still fairly relatively easy to be tracking what your return on investment is. If you're doing digital advertising, what is your cost per acquisition? And, if you're working with an outside agency for your digital advertising, they're probably providing that to you. So really for the majority of the initial key metrics for your business, you can count for that on your own. Of course, it's better for you to not be doing the calculations yourself and have someone internally helping you out or externally. But of course, what investors are focused on and what you should be focused on besides the top line and sales, what your velocity is and your repeat purchases and retention is that, what is truly your COGS and your gross margin, which, okay, in the initial stages, it may not be where it should be in the long term, but is there a path to that? And so that is something that you should be, sales is much, much easier to be tracking on a daily, weekly, monthly basis, whereas your actual COGS and gross margin do require more bookkeeping and proper accounting to get your true COGS and your true gross margin. So that's where bookkeeping internally or externally really does help with you being able to understand that, because without a path to strong gross margin, then eventually you could only have so much top line growth without that. So I highly recommend that being able to properly account for your COGS and fully loaded COGS and gross margin is critical too.
How often do you see, founders that are really in tune with this information? How often are they reviewing this kind of info? How much time are they spending on it? Is there any, best practices you've seen for monitoring these metrics as well as far as a cadence?
Yeah, for direct to consumer side of the business, it's very easy, or almost too easy, to monitor your sales performance. So you could, checking it, throughout the day, or at least daily, which I don't recommend, because you become too obsessed or overanalyzing the day to day. Whereas looking at more on a weekly basis at a minimum, and monthly more so, and when you're able to compare it to this month versus the same month last year, it is wonderful. And because there's nuances to every day and every week, and so to not get caught too much and too obsessive with performance each day of your business. Like don't judge yourself based upon a single day or even a single week. And as companies start to grow more, I usually make a push to think about the business on a quarterly basis. Monthly revenue can be lumpy, especially with the wholesale business, when an order delivered on the 1st instead of the 31st, or vice versa. That's a big order that can throw off a month. But looking at a quarter on a quarterly basis, your wholesale revenue is more reasonable.
Right. That's really helpful. And I appreciate your note that there's such a thing as reviewing too much, looking every day at every day's like e-commerce, especially. can suck up a lot of time and just not be the most realistic view of what's actually going on.
Yeah, it's difficult, when there's available information, especially we're used to instant gratification and, you want that positive feedback loop right away. But many of the, key qualities of success in growing your company is patience and not getting hung up on, one day or one relationship or one customer. So it's a good test or practice of you really managing your time well and how you look at your business by not getting too caught up in daily.
Mm-hmm. This also makes me wonder if there are other common pitfalls or, mistakes or just best worst practices, I guess, to avoid as you're hiring your first few, people within finance and accounting, or your first full finance hire since you've been that person. What are some mistakes or pitfalls you've seen people make that, that you can avoid or plan for ahead of time to make it smoother?
Yeah, I highly recommend that after you interview, whether it be an external firm, external bookkeeper, of course, internal hires, is speaking to their references. Even if it's a glowing, wonderful reference, then after you speak to that reference, you'll still learn a lot about how to work with that internal or external person. And it could be really constructive and valuable for you, as well as some people are, interviewing very well, right? Whether it be a external accounting firm that, the head of the firm is, very, very salesy, very good at pitching you. But who are you actually going to work with? Which is often when you're interviewing external firms, you don't speak directly with who, the team you'll be working with. So to really speak with references to understand how it truly works at those external firms.
Yeah, that's very helpful, right? When we've talked about some of the other functions in this series, both in operations and marketing, we talked about how, sometimes you really want someone with a lot of expertise, but what you can afford is someone with not a lot of expertise. Do you see finance as being a function where you can hire someone, fractional, or to come in and consult about how to set up your finances and your accounts payable and your bookkeeping, and then, you hire them short term, and then you hire someone longer term that maybe has a little less experience, but they can now run within what's been set up? Is that a setup that works within finance as well? I'm curious.
Yeah, that's a potential excellent solution. That's something a founder is comfortable with. There's a lot of expertise, experience in the fractional CFO space or finance, accounting, consulting. And it's definitely, it is with someone who's not hands-on, is really providing guidance. You need someone to be executing. But, in terms of, finance, accounting, it's not complicated math. It is addition, subtraction, multiplication, division. So, someone without an accounting background can be a junior role that, with guidance, if they're a self-starter, or they take ownership and they've demonstrated their ability to be successful in an environment different outside of accounting or outside of CPG, then it's possible. Ideally, they do. Your junior hire would have some CPG experience, but certainly with a consultant, fractional CFO, being more strategic, high level, and then a junior person that's executing and building out accounting and bookkeeping for you, that's definitely a good potential solution.
Great. Was there anything else that you wanted to share on this topic of first hires in finance? Anything that we missed or that you really wanted to make sure everybody knew?
Yeah, just wanted to, would like to reiterate that, there's accounting and finance, and accounting is often thought of within finance. And just for founders out there to think about, accounting can be maintenance and making sure everything's recorded properly. And when do you want to think more strategically about finance, and not only building out your financial projections, but really having insights in order to make strategic decisions for your business. And it's something that's good to become comfortable with sooner rather than later, but everyone has their own timing. And but it can be a valuable part of your business and inform and influence the future success of your startup.
Great. That's awesome. And I'm wondering if you can tell us a little bit about, how, if people want to connect with you after this, where can they find you? Are you in the Startup CPG Slack? And then also if they want to order some tea, how do they get some tea in their life?
Absolutely. Yes. Happy you asked about that piece of it. So if you want to connect with me, yes, I'm on the Startup CPG Slack. You can connect with me there, as well as, you can check me out on LinkedIn. Happy to speak to anyone individually. Love to share as much knowledge as I can to help in entrepreneurs and founders' success. And in terms of tea, I currently work at Yamamotoyama, which is a family-owned, more than 300-year-old Japanese tea company. And our website, Yamamotoyama.com, as well as going back several decades ago, we also acquired Stash Tea, which was one of the largest tea brands in the US. And StashTea.com is another great place to purchase tea.
Excellent. Great. Well, yeah, we got to cover so many of my favorite topics: tea, first hires, finance and CPG. I mean, we got to talk about all the good stuff. So thank you so much for joining me, William, to share your expertise and knowledge. I'm super excited to share this with our community and just so glad you could be here.
Great. Thanks a lot, Jesse. Really, my pleasure. Really enjoyed speaking about this. It's near and dear to my heart, and, love speaking with founders and working with founders and entrepreneurs about how best make strategic decisions and how finance and accounting can influence that. So very happy to have been able to participate.
Thanks for joining us. This Startup CPG podcast is executive produced by me, Jesse Freitag. Theme music is by the Super Fantastics. We'd love to have you join our community of founders and experts. Get the invite at startupcpg.com. And don't forget to subscribe to this podcast on Spotify, Apple Podcasts, or wherever you're listening right now. It's the easiest way to help us grow our community. See you next time.